On the fixed income and currency markets, we've got Manish Wadhwan, who's Director and Head of Interest Rates at HSBC, joining us on the show. Manish, to begin with, I think the big focus really for everyone is the liquidity situation. Going by this morning's LAF, it's still at about 180,000 crores. The system is in deficit at. On the 15th of March, what are you all expecting? Are you expecting a further cut in the CRR or a half percentage cut, or are you even penciling in something more than that?
I think a 50 basis point CRR cut is a certainty now, the way things are going on. Liquidity shortfall actually has turned out to be far more severe than what markets and I think the central bank expected. We coincidentally had an announcement yesterday on OMO again, and there was typically RBI has been, announcing the OMOs along with the auctions, and it turned out to be a positive surprise for markets in the sense that there is no auction this week. Still, they have come up with an OMO. So from that point of view, I think with the overall shortfall, average shortfall for the fortnight hovering around 150 to 160, and in the month of March, by mid-March, it can go up to 225 to 250,000 crores. A CRR cut of 50 basis points, I think it's already on the table.
Right. So, Manish, this spurt in deficit that we've seen over the last 3 days, would you, a lot of bankers we speak to put this down to the MCX IPO and the fact that there's a lot of money flowing out from banks to infrastructure bonds and these tax-free bonds that are typically offered before the year end. So, going by that, should we expect that running up until the end of March, this deficit is going to stay, that it could possibly get worse going, moving on from here because of the advance tax payment again that will come in a couple of weeks from now?
Two separate issues here. As far as infrastructure bonds is concerned, or any money which goes to any other entity, whether it's infrastructure or an NHAI, that still remains in the banking system itself, so it doesn't change the liquidity parameters. But yes, the other issues are, it affects liquidity in the sense the IPOs which happen in the ONGC auction also, which is tomorrow, is going to happen. There are a lot of uncertainties in the sense how will the money flow in, if there is an oversubscription, and if the money has to go back, and how much would get shifted if there is a FI participation. So these kind of rigidities exist. I still feel that the numbers can become worse by 15th or 16th. We can see a number of something like 225 also. This would continue till at least end of March. By the end of March, you see a massive government spending which always goes on. That number can be large. So in conjunction with what we anticipate that a 50 basis point CRR cut will take place, and the month-end spending which takes place, you go into April with a shortfall getting reduced by at least 1 lakh crore. But till end March, the situation is going to continue. And it is getting accentuated by sudden surge in credit demand also. In the last fortnight, what we are seeing, I think the numbers will be there in the next week. So it's a combination of these two things. The advance tax payments, what we talk about, the IPOs, what you said, and in any case, the liquidity is already pretty tight. So we don't see end of sight till the next 20-25 days.
Sure, but Manish, the surge in credit demand that you're speaking of, would you link it back to the deficit situation? Because, again, bankers say that the big reason you're seeing a surge in credit demand is because of the liquidity conditions. CP rates have gone above 10%, they're at about 10.5%, as a result of which a number of companies are borrowing a short term from the banking system itself. So would you link this back to that?
It's a catch-22 situation. It's very difficult to say. If you look at the broad numbers, the big numbers, actually deposits and credit are growing hand in hand in this year. So from that point of view, definitely with the kind of issuances which are happening from the government are also, sucking away the demand. So this year, till date, whatever data is available, we have not seen any massive increase in deposits also in comparison to the last year. So overall, structurally, liquidity is in deficit. It's very difficult to say that the corporates are borrowing because there is a liquidity deficit and the rates are going up. There is overall a deficit. For the average, we have seen it's around 150, 155 now. It has been hovering at 1 lakh crore in the last 6 months. In the month of March, this is a very usual activity which is happening, that there is a surge in credit demand, which is a very normal activity. But I can't, say that it is because of the liquidity shortage. Overall, the way things are, this was on expected lines, and this is happening on expected lines. So all these things will go on in this fashion, that we are going to see advance tax outflow from the system, and we are going to see large credit demand from the corporates in the month of March also. And simultaneously, to just service that, banks have to be issuing CDs and garner more deposits. So this is a combination which will go on till March end. There is no respite from this.
Manish, so in light of all of this and the liquidity situation that we're working with, would you be cautiously bullish on the yields on the 10-year bond, and what's the range that you're foreseeing?
Yeah, I think one of the parameters, one of the important factors which I would take into consideration is the GDP number which came in today. It is a disappointing number from that point of view. There is a possibility that, and the markets have started factoring in some kind of a rate cut expectations in April. The surprise element could be if RBI decides to start the year, and before the year end, if everybody is expecting a CRR cut, if he gives you a hint of a rate cut in that April policy, or might even deliver a 25 basis point rate cut to start the year with, that could be the trigger factor. And besides that, coming back specific on the bond yields, they have been affected by the OMO announcements this year, and RBI has already bought something like more than 1 lakh crore till now, and they are still doing the OMOs. It is quite possible. I would, if you ask me the range on bond yields, 10-year bond yields, I think in the next 2 to 3 months, I see them between 8 to 8.35. I would put my bet on.
Right now, Manish, based on the GDP number again that we had just a short while ago, there are some people who are beginning to expect that the RBI will act much sooner on interest rates than the April rate cut that we've been speaking of for so long. There are some of the view that you might see a 0.25 percentage point cut even on the 15th of March. Would you say that's too much to expect from the RBI?
I would not rule that out now in this kind of a situation, the way things are panning out. George, I think with the GDP number in the last 1 month or 15 days, whatever news flows are coming from the government side, there is some action you can see on the policy front also, whether it was on coal or on the gas front, EGOM coming up and, trying to give some kind of a spin to growth. And if you take RBI also into the big picture, because being part of the government policy making, you might see, that's why I was also expecting this, that there is a possibility now that RBI might put in a 25 basis point rate cut on the table before the beginning of the new year. That's quite a possibility now, though the market expectation, average expectation is that rate cuts will not happen before April. But now it's a matter of time whether RBI starts doing it in the month of March itself. The way things are going on, GDP numbers are not too exciting. Overall, inflation also is falling into trajectory what they were anticipating, hopefully. I think barring oil prices which were giving a bit of jitters or which are still a risk to this kind of a view, I think putting everything together, a 50 basis point CRR cut and a surprising 25 basis point rate cut also is a possibility in the month of March.
All right, Manish, thanks very much for coming in on the show with your take on the outlook for interest rates and also talking to us about the liquidity deficit picture that you are presently seeing in the banking system.